Hey everyone, welcome back to the channel. Today, we're diving deep into a really interesting player in the uranium space, Denison Mines Corp, trading under the ticker DNN. If you're curious about the nuclear energy boom or looking for exposure to uranium as a commodity, this stock might be on your radar. So, let's break it down step by step, from the company's background to its financials, valuation, and where it might be headed. Stick around, and don't forget to smash that like button if you find this helpful. All right, let's get started with a quick overview of Denison Mines. This is a Canadian company based in Toronto focused on uranium exploration, development, and production. They're not your typical massive miner yet, but they've got some serious potential, especially with their flagship Wheeler River project in Saskatchewan, which is one of the largest undeveloped uranium projects in the world. With nuclear energy making a comeback as a clean energy solution, companies like Denison are in a unique spot to capitalize on growing demand. So let's dig into the details and see if this stock is worth your attention. Now let's talk about who Denison Mines really is. Founded in 1997, Denison has been in the uranium game for a while. Their primary focus is on properties in the Athabasca Basin in Saskatchewan, Canada, a region known for its high-grade uranium deposits. Their biggest asset, as I mentioned, is the Wheeler River project, which includes the Phoenix and Griffon deposits. They're also involved in other exploration projects and have a stake in uranium processing through their ownership in the McLean Lake Mill. Led by CEO David Cates, Denison employs a small team of about 65 people, but they're laser-focused on becoming a key player in the uranium market. With a market cap of around $3.4 billion and trading at 3.82 cents per share, they're a mid-sized name in the energy sector with a lot of eyes on them right now. Let's move on to their revenue picture. Honestly, Denison's revenue stream is pretty thin at the moment because they're not in full production mode yet. For 2024, their full-year revenue came in at just over $4 million, which is a small figure compared to their market cap. Most of their income right now comes from smaller operations, toll milling services, and other ancillary activities. If we look back at 2023, revenue was even lower at $1.85 million, and in 2022 it was around $8.97 million. The numbers fluctuate quite a bit since they're not consistently producing uranium at scale. Their focus is more on exploration and development, so don't expect big revenue numbers until projects like Wheeler River come online. That's where the real growth story lies, and we'll get into that potential later. Now, let's chat about their earnings. Denison's earnings history is a bit of a roller coaster, which is typical for a company in the exploration and development phase. In 2024, they reported a net loss of about $91 million, translating to an EPS of negative 10 cents. Compare that to 2023, where they had a solid profit of $90.4 million, or 11 cents per share, largely due to some one-off gains and favorable market conditions. Back in 2022, they posted a smaller profit of $14.4 million per share. The key takeaway here is that Denison isn't consistently profitable yet. Losses are common as they invest heavily in their projects. But when uranium prices or other factors swing in their favor, they can show some nice upside. It's a high-risk, high-reward kind of story right now. Let's take a closer look at their financial health through their balance sheet and cash flow statements. As of 2024, Denison has a decent cash position with $108.5 million in cash and equivalents, down from $131 million in 2023. Total assets stand at $663.6 million, while total liabilities are relatively low at $99.3 million, giving them a strong equity position of $564.3 million. Their current ratio is a very healthy 11.97, meaning they've got plenty of liquidity to cover short-term obligations. On the cash flow side, though, things are less rosy. In 2024, they burned through about $40.4 million in operating cash flow, and free cash flow was negative $48 million. They're spending on development, which is expected, but it does highlight the need for future funding or partnerships to bring projects to fruition. Overall, the balance sheet looks solid, but cash burn is something to watch. All right, let's talk valuation. Denison's current price-to-earnings ratio isn't meaningful right now, due to their negative earnings in 2024, sitting at a negative 22.93. Their price-to-sales ratio, however, is extremely high at 922, which reflects the market's optimism about future growth rather than current revenue. Enterprise value is around $4.31 billion, higher than their market cap, factoring in debt and cash positions. When we look at forward PE estimates, there's a wide range of projections. For instance, by 2028, some estimates suggest a forward PE as high as 276 or as low as 92, showing a lot of uncertainty, but also potential for massive growth if they execute on their projects. At $3.82 per share, the stock seems priced for future success, but it's definitely speculative at this stage. Now let's break down Denison Mines through a SWOT analysis to get a clear picture of where they stand. Starting with strengths, Denison has a solid financial position with a strong balance sheet and ample liquidity to fund ongoing exploration. Their Wheeler River project is a major asset with world-class potential in a stable jurisdiction like Canada. On the opportunities side, the global push for clean energy and nuclear power is a huge tailwind. Uranium demand could skyrocket in the coming years, and Denison is well positioned to benefit. However, weaknesses include their lack of consistent revenue and current unprofitability, as well as heavy reliance on the success of a few key projects. Threats are real too. Uranium price volatility, regulatory hurdles, and geopolitical risks could impact their operations. Plus, competition in the uranium space is heating up, so while the upside is exciting, there are definitely risks to weigh. Let's take a look at Denison's recent stock performance. The chart shows some incredible momentum over the past year. Their stock is up a staggering 157.6% over the last 12 months, and over 5 years, it's gained 242%. Just recently, the stock crossed above its 200-day moving average, trading as high as $5.65 on the Toronto Stock Exchange. Short-term, over the last week, it's up 6.27%, and over 3 months, it soared 75.43%. This kind of performance reflects strong investor interest in uranium and nuclear energy plays. That said, with such rapid gains, there's always the risk of a pullback if market sentiment shifts or if broader economic conditions tighten. For now, though, the trend is definitely bullish.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.